Investors here put Europe's woes to one side to kick off the week with some positive gains. I spoke to Charlie Aitken from Bell Potter Securities earlier. Well, Charlie Aitken, a burst of enthusiasm for the start of the week. Where's that come from?
Well, I suppose we're just looking at the week ahead, Ticky. Hopes of interest rate cuts. Result was pre-released by the National Bank today, which was okay. And BHP actually having an up day as US gas prices rallied. But really, I think it's more anticipation of the Reserve Bank tomorrow. But it was a good day. The market ended up near 4,400 points.
Well, to the stocks, a deal has now been done between Spotless and private equity group PEP under a bit of pressure from the shareholders, I gather.
It seems shareholders had a little bit of an influence here, and finally a deal has been done. Remember, this has been going on for the best part of a year now since Blackstone originally made a bid. But look, the shareholders have got a $2.71 bid plus the franking credits, which seems pretty fair. But because of the time value of money on the deal, the shares only closed up 10 cents at $2.58 today. So a positive for the shareholders and positive that the deal's been done, but it just take a little bit of time to get the full payday.
Over in the west, Woodside Petroleum production starting to come in there from Pluto. What was the impact on the share price? Because we've been waiting for that event, haven't we?
We've been waiting since 2004 when they discovered Pluto. That's how long this takes from discovery to production, these big capex businesses. But look, I think the market liked it a little bit today. It was up 1.5%, but you've got to put it in context. Pretty much all major resource stocks were up 1.5% today. So I think really more about the market than Woodside itself, its gain today.
How did investors like the first half results from BT Investment Management?
Not particularly well, but I think this was more about cutting the dividend why the shares are down 5% today. Yes, the first half earnings are down 24%, but I think that's expected. Most of us who work in share markets, Ticky, realise it's been pretty tough and realise the asset markets have been tough in the first half. But they cut the dividend from 6 cents to 5.5 cents, about a 10% dividend cut, and the shares lost 5%. So.
And Charlie, what is your tip for tomorrow's RBA rate cut?
Well, I have my fingers and toes crossed that the RBA board sees sense and cuts by 50 basis points. 25 basis points wouldn't be enough for the share market. They're looking for a little bit more than that. And then maybe the banks pass on 35 or 37 of those 50 points. But look, the market expects 25. It would get a very positive surprise if I'm right and we get 50. So let's see.
True to your bullish form, Charlie Aitken, thank you for joining us.
Thanks, Ticky.